Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the euro currency. So here is drastic changes have happened on last week when we've got the Fed comments and payrolls report, which is actually has become second in a row with the numbers in excess of the 300,000 of the new jobs created. We have talked a lot about this indicator and we have explained why we think that it is not quite correct, let's call it in this way, although it might be intention cheat of this indicator just because for the purposes of the national government and the financial system, so United States Treasury, the Fed and so on. So we will not repeat this stuff again, but the one thing that is worth it to mention here is that if this is manually controlled process of adjusting of the statistics, hardly this process will be stopped in the nearest time, because it seems that the government and the financial authorities take the course on the strength of the United States dollar, or at least that it should be a bit better than the rivals. And this is trying to be achieved by showing the statistics that, as we suggest, has low relation to reality, but it shows really very high numbers that led market to think that the rate cut will be later, and that brings some strength to the United States dollar. Second moment, you could see very small reaction on the stock market. Although you could see big drop on the euro currency, on the gold, you do not see such a reaction on the stocks. That is because despite of the high rate, market has the source of liquidity. It's constantly supported by new inflows in a way of the BTFP program, which should be ended in the 11th of March. But additionally, Fed and United States Treasury has resources of the repo market, which is around 600 billions, and United States Treasury has the cash on its Fed account, which is approximately 800 billions. So all this stuff together, if even BTFP program will be closed and rate will remain at the high level, will be enough to support market until the end of the year, or at least until the moment when they will decide to stop doing it. So currently, if you take a look at the S&P index, you will see, personally, I will consider this type of pattern. This is monthly chart, guys, so it's really big. So within the nearest few months, it's 51.67, and it's nearest target of the S&P, and 1618 stands approximately 56. But concerning this target, I am not sure this will be achieved, but within the few months, S&P easily could keep climbing based on the inflows that we just have discussed. At the same time, if you control the media space, you probably heard about that in the Netherlands they intend to forbid Facebook, and also it was some attack from the tax provision on the Microsoft. So it means that overall tension around the high-tech companies are increasing, which means that the rally on the stock market is probably somewhere near the end, because this usually happens when the big guys already are out of the market. Besides, we have published in the Telegram many times that the Zuckerberg are selling stocks now. The business will sell Amazon stocks. So it means something is really growing here. So when I'm speaking about all this stuff, just tell you that with the tendency that we have currently on the euro currency, it seems that hardly it will change anytime soon. So since it is controlled artificially and manually through the statistics reports and comments from the Fed, they will try to keep the trend of the relative strength of the United States dollar. We agree that the dollar looks better than the euro even from the fundamental background, but we disagree over the points that the recent appreciation states not because of these changes, fundamental character, but because of the statistics report. So that actually accelerates this action. So as we decided in our weekly report, now we're considering different patterns. One of them might be the reverse head and shoulders on a daily chart. Grabbers that have been formed worked perfect, so you can see market drop below this area. Now take a look, it stands near 618 support, 107.12, and near the oversold. So this is relatively nice support where a bounce could happen. Now the big question concerning the right arm of this pattern, because bounce to the 110 now seems very significant. On what background it could happen? Hardly Federal Reserve and statistics entities will give you the really weak inflation numbers in the nearest time. So they need to support dollar, they need to support the pressure of the interest rates. So from that standpoint, we will not exclude the chance where we get not the hand shoulders, but it might be straightforward downward acceleration. Besides, here within this choppy action, you definitely could see the acceleration right to the neckline. That's why we treat the chance of the moderate retracement here mostly as the same probability as possible deeper retracement to the 110, where we do not see yet the reasons why it could happen. So that's our task for now. So what we need to do on the euro currency. On the 4-hour time frame chart, you could see that OP target has completed perfectly, which creates also an agreement with the support, right? So we have not just the oversold, but also we have the agreement support with this 107 area, which also brings some additional background on the pullback. Here you could see even better the acceleration. Acceleration to OP usually means that these minor hand shoulders could keep going to the XOP target, which is at 105.70. That's what I'm talking about. That market could really show not the pullback to the 110 of this neckline of the big pattern, but it could just be broken and market could keep going to the next target of this minor head and shoulders pattern. It's also possible. For that purpose, to understand what's really going on, whether we'll get this big bounce or not, we need to keep an eye on what is going on the hourly chart, what patterns will be formed, and what the performance will be. So, but now, for now, on the hourly chart, I would consider some patterns. One of them might be the double repo. Since we stand at a strong support, deeper retracement now seems reasonable. So it's logical to suggest that this might be a bit better. And from that standpoint, if double repo will be formed, the level that market could try to test will be around 108.30 confidence. And then we will see what will happen. If some bigger pattern starts to form with the higher retracement to the 110, we probably should see it. If not, then it's probably market will just keep going lower. So for now, we are not taking new shorts. Despite that great downward action, market stands in the strong support. We are waiting for reaction and watching for the particular bullish patterns that might be formed on the hourly chart. One of them might be the double repo pattern. That's particularly what we are watching. Also, it might be classical patterns as usual, butterfly, minor hand and shoulders here or something. All will be good for us. Then we're trying to trade it maybe to the upside, some near standing target, and see what will happen. So that's in short our trading plan for now. Let's see.